Hey, what's going on, everybody? In today's video, we're going to take a look at some earnings we've still got coming the rest of the week. We'll look at some important data that's also coming through the week. We've got lots of charts to go through. We'll take a quick look at the whole FRC situation, do a quick little Fed preview, because that's coming up next week. And of course, we'll look at lots of charts, and we'll look at some previous setups that we might have been playing. So let's move on and get into this. Hey, hit that like button. It really helps us out. And if you're wondering who I am, I'm Kevin D in the Discord, full-time trader, and I am here to help you make sense of all of this. All right. So we do these videos every week to help our members stay up to date on what's going on in the market and to highlight some fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and live mentoring sessions. So check it out down in the link below. We'd love to have you come join us on the Discord. Okay, here is a quick disclaimer. Everything we do here is for educational purposes only. We're not investment advisors, not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, here is the rest of the week for earnings. So tomorrow morning before the open, we have American Airlines. That will be closely watched. Caterpillar is a big one. MasterCard, of course. But, you know, that moved a bit with Visa, who's already reported. So probably not a ton of stuff going on there. Crocs. I know Crocs is a popular one with traders. Probably not to wear them, but to trade them. After the close on Thursday, we have Amazon, Intel, Snap. So we got some big names here, and then we've got some other, other interesting names. Maybe Cloudflare for solar would be interesting. Pinterest, Gilead probably. So lots going on Thursday after the close, and Friday before the open is still fairly busy. ExxonMobil, Chevron, Cameco, big uranium producer. That could be pretty interesting. So. Only really a day and a half's worth of earnings to go in this week, and it feels like it's a full week of earnings coming. Okay. As far as our macroeconomic data coming, tomorrow is a fairly important one. GDP for the first quarter. So this is advanced GDP. As you may know, the GDP comes out 3 times. It gets revised twice, basically. So we have the advanced GDP, that's the first one, and it gives us a first look. And then there'd be 2 revisions of that coming over the next couple of months. So this is very closely watched. And of course, as always on Thursday, we have unemployment claims. On Friday, even more closely watched than the GDP is the PCE price index. That is personal consumption expenditures, and this is what the Fed uses, especially AAPL, to see what inflation is doing. So obviously that's extremely important. We also have on Friday consumer sentiment, the U of M consumer sentiment, and U of M consumer inflation expectations. Those are also fairly important numbers. So we have we got a busy couple of days ahead. And then next week we get into the Fed. We'll talk about that in a few minutes. Okay, so we're going to take a look at the market. We'll look at our major indices, some international markets, important commodities, major sectors, and any setups that we're keeping an eye on. But first, why don't we take a look at our short-term market regime tracker. Now, if you remember last week, a week ago today, we were up here at +5. We have moved all the way down to -1 now, and moving fairly quickly potentially into the red zone here. Now, so far, this is just really a pullback in an uptrend. But it's, sentiment's pretty negative right now, and this has the potential to get a little more serious. And we'll look at those charts, and we'll see why. So speaking of that, why don't we just get right into these charts right now. This is the chart of SPY, the S&P 500 ETF, and you can see that we have, we started to roll over, a week ago. But very slowly, and nothing to be at all concerned about. But yesterday it got more serious, right, with the gap down and just sold off all day. And today we tried to open higher. I mean, it was just barely green on the open today. And we kind of, chopped around and moved down again today. I kind of suspect, short of any major catalysts, and there might have been one after hours, and we'll talk about that as well, but short of any other major catalysts, I think we continue down. Now, we've already talked about what those major catalysts could be, right? GDP tomorrow and PCE on Friday, and that could totally turn this around. We could easily get all this back in a couple of days and go into the weekend way up here if those numbers come in favorably to the market. Now, other things that are going on that the market's a little concerned with right now, we might as well just look at this right now. Let's go to our FedWatch tool. Actually, no, you know what? I'm going to wait until we get to the bonds before we do that. Let's go to our Qs. Okay, so this is the NASDAQ, the QQQ ETF. And you can see that yesterday we had that big red bar down. We just peeked into the gap on this one. And then today we actually gapped open quite a bit, and then pulled back, lost a bunch of that. But there's something going on after hours, and we should probably take a look at that. So why don't we right now? And you can see in the after hours, we are getting a lot of this back. In fact, we're very nicely green, and we're above. Where do we open here? Yes, we are above the open now. So that candle on the daily, if it included the after hours here, would actually be green and not red. Because if we had closed here, right, we would have closed above the open, and that would be what is needed to turn that candle green. So this is really good. This bodes well for tomorrow if we can hold these gains. Okay, let's go back to our daily chart and move on to IWM. Now, IWM is very weak. No surprise here, because this is where all the regional banks are and the small banks in here. And, this decline over the last couple of days has all been caused by First Republic. We'll look at that in a little bit too and go into that a little bit deeper. But you can see we're coming into some important support areas here. We've got this sort of former downtrend line. That should act as resistance. We've got some horizontal support levels here. So I would really be surprised, unless this banking crisis suddenly gets more serious, which is kind of hard to imagine. This area should hold. We might see a little bit more downside here, but I really do think it's going to hold somewhere in here. Okay, let's move on to the volatility index. Now you can see this has come up off the lows, but got rejected by 20, and it's pulled out, in the middle of this sort of old range here between 20 and 18. I suspect we hang out here for a bit, unless, like the PCE comes in really favorably, like I talked about earlier, and markets just start rallying on that. Then we would see a turn down and back, and coming in to test the 16 level again. All right, our 10-year yield, what is that doing with all of this going on? You can see that yesterday we had a big gap down in the 10-year yield, and today we're just sort of inside the range, almost inside the range of yesterday. But that is quite a gap down there, and we should actually probably draw that in. So there's our close, and that was our open. So I mean, this is interesting. This is interesting behavior, and we can see this play out. Now, the bond market have basically been pricing in a very near 100% chance. On the weekend, if you remember from the weekend video, we were very near 100% chance. I think it was 94 or 96% chance or probability of a 25 basis point rate hike at the Fed next Fed meeting coming up on Wednesday. So yeah, if we were mid-90s on the weekend, we have now come down to 72%. And that's what you saw there in the bond market, and those yields coming down, is this probability of a 25 basis point rate hike on its way down. Now, what's a little bit scary here is it's pretty much a sure thing, I think, that, unless over the next 2 or 3 days, the banking crisis gets much deeper, and again, I really don't think that's going to happen. This has a lot of work to do to get back up to 100%. And that could play out, will certainly play out in the bond market, and we should see those yields rising. Let's go back over there. We should see these yields come back up and close this gap and get just above the gap. But we should also see our equities come down. Now, equities have already been coming down a lot for other reasons. But if we see a sudden rise in the bond market, I think that could have a negative effect on equities as well. So something to think about and be aware of as we move forward here. All right, let's take a look at our dollar index, and you can see the dollar index is still hanging out right on the neckline of that head and shoulders. Remember, this is us on a weekly. We want this on a daily chart here. I'll go to the weekly here and show you. There's that head and shoulders on the dollar index on the weekly chart. Let's go back over to the daily here. And you can see we're just hanging out right on this neckline. So, below the moving averages, I'm expecting to see this fall through here. Okay, let's move on to our global indices. And as you might expect, these had a bit of a red day. We had a big gap down in ACWI. So this is ACWX. This is the all-world equities, less the United States. And that had a big gap down yesterday and gapped up a little bit today and then gave it all back. But we're hanging right in here on the 21-day moving average, and I think that things are going to start to settle down, and this probably goes sideways for a little bit in here before it can turn up. If we look at EFA, this is the Europe, Developed Far East, and Australia. You can see this still in that range, just barely. But we've got some support levels close by, the 21-day moving average, and this horizontal support here off of these highs. So not too concerned here and expecting this to take a move up. I think that just sort of the whole macroeconomic situation needs to just calm down a little bit, and we will see this rally. Emerging markets, these are quite weak though. And this is starting to become a bit of a concern because as you can see, we're dropping through all these moving averages. And as far as moving averages goes, our 200-day moving average is kind of the line in the sand here. We do have some more horizontal support below, but I think this is a really important area that this is at right now. And this really needs to turn up from here, or we could see a lot more downside. And finally, FXI. This is the Chinese large cap, and these have had a pretty nasty week. Lots of gapping down, of course. But today, gapped up, unfortunately gave a little bit of it back, but not too bad. It's really good to see, this start to move up again. I guess has come close to this pivot. It's really more off of that low right there, isn't it? Which was a former gap. Interesting. Let's get this level in. I think this level may come into play. Where about there? Now let's bring that down to here. There we go. Okay. Yeah, this is this 2733, looking like an important level here in this ETF. All right, so that was China. Let's move on to our commodities. We'll start with gold. And you can see that gold, after its rally, is kind of taking a break. Now, this is a bit of a bear flag here, but not much of one, right? I mean, we don't have much of a flagpole, so not too concerned about this. But if we look at some of the other areas where other commodities, I think you'll see why I'm a little more bearish on gold than this pattern would suggest. And I would not be at all surprised if we see a move down to at least the 50-day moving average here at around 1935, or this important support resistance level down here at around 1920. Let's look at our miners. And you can see that these have also set up with a nice bear flag and a big bearish engulfing candle today. So I mean, this is not a healthy candle at all. You know, this gapped up nicely this morning, almost tagged that 10-day moving average, and then spent the entire day selling off. Has come down to test these lows again. It's engulfed 3 days worth of price action. The only good thing about this right now is it's holding right on that 21-day moving average. But I would not be at all surprised if we see these gold miners break down. And if they do, I think we could see a fairly quick move down. And if the miners are coming down that quickly, gold will probably come down as well. Now, if we look at silver, you know, we kind of want to see if we see any confirmation here. And, you know, we are seeing, this is trending down in the very short term. Again, found some support of that 21-day moving average, and also the support level 2450, which was really important back here. We're going to put in all these highs back here. So this should be fairly strong support here. But again, if you see this break down and through here, I think we're seeing all of the metals break down fairly quickly. That was silver. Let's move on to copper. Now, copper has broken down. Look at this, the way this was consolidating in here, getting tighter and tighter and tighter, and just gave it up and broke right out of there. That horizontal resistance, support level did nothing for it when it broke down out of this pattern. Now, we do have the 200-day moving average just below, and some horizontal support, and we would expect one of those levels to hold, but would not be at all surprised if we see more downside out of this over the next few days. All right, let's move on to oil. Guess what? This is breaking down too. So after you know, this nice rally right up into the 200-day moving average, a major resistance level, rolled over there, came down, built a bull or a bear flag, and is now fulfilling that bear flag. So big breakdown today in oil. I think we should expect to see more downside. We can get a measurement on this bear flag. If we start from right about there to where it broke down out of that, which is about there, we just grab that, move that back to here, and that gives us a target right here of about $70.25. May as well get that marked in so we can keep an eye on that. So that is the target on our, oops, just a little bit lower. There we go. That's the target for the bear flag. So you can see we should be expecting a few more days of downside out of this. And I kind of think that if we get down to here, I mean, I guess there has been some support just below that. So maybe we could bounce there, but that brings this important support level here and these couple of lows into play as well if we get down to here. So watch out for that on your oil plays. That's not somewhere you really want to be right now. And we're also seeing natural gas breakdown. It was down over 8% today. Was unable to get up through that resistance level. No surprise there. I was expecting to see this breakdown. I'm sure I've mentioned that in the videos. We are probably going to, or would be shocked actually, if we don't come down and test this pivot. So, you know, the $2 to $1.97 area right down in here, and test that. And a breakthrough there could get pretty ugly for natural gas. All right, XLE, speaking of could get pretty ugly on a break. So you can obviously see how important this support level here. Now it held today, got the 200-day moving average there. Really important support level in here, and the bottom of this gap. So this gap is filled, so I'm going to delete that gap out of there now. Yeah, a break down below here probably would come down and test these lows. Would not be good for the oil industry to see a break below here. XOP, the major producers, you can see that's really already broken down. and going to come down and probably test a support level soon, a minor support level. These lows in here are potentially going to come into play. Oil services. This is also rolling over, not quite as weak as the producers. But if those producers are going down, this is going to continue to come down, and I think that a test of this support level is in the cards for this ETF. And we'll take a look at TAN. Big gap on TAN. TAN does like to throw its gaps in there, but this is a nasty move down today on Enphase earnings. Enphase was down, I think, as much as 22% today. Nasty move on Enphase. And really hurting this ETF, obviously. And there is the gap that is left behind. I mean, this thing is just we got so many gaps in here to fill. I mean, we don't have to fill them, but it's looking like it wants to. All right. So you're kind of getting the risk off theme that we're seeing here. We're going to see some more of that. All right. Consumer discretionary. I am really disappointed about this one. This is one I really wanted to hold up. This was a good pattern. A breakout to the upside would have been really nice, and I think would have got a nice big move out of it. And as said, we've broken down below here. We've now got 2 closes below. That does not bode well for consumer discretionaries. However, we've got that 100-day moving average just below, and that would be a logical place for this to try and find support if it continues to move down. XLI Industrials, another one that's rolled over quite a bit. We've had 2 really big down days and some gaps in here. So there's a fairly decent gap there, and now that gap is like right at a major support resistance level, so that's going to be tough to get back up and through. And then we've got today's gap is here. Now, we do have that 200-day moving average just below, and we've got these pivots. So again, this is an area where it would be logical to see this find support. However, if it doesn't, you can see that there's a lot of dead air in here. I mean, I just don't want to think, if we start losing these kind of levels, right, and get into, because there's a lot of charts that have this kind of dead air in here from this really big, fast move up in October. We start getting into here and moving down through here, it could get really ugly for the markets in general. That was industrials. Okay, financials. And yeah, if things are going to get ugly for the markets in general, it's probably because of this. So we've had an ugly rollover here, but it was after a decent rally. And now today you can see we are sort of near the top of that range that it formed after the initial crisis. And again, I mean, this would be a logical place for this to find support, for these financials to find support. Now, if they don't find support here, though, I mean, we can see, we can probably get, I'm going to actually draw that in. There's a little pivot right there, or a couple little pivots. That's a potential spot. It's not, I wouldn't really call this a support zone just yet, but it is a spot where we could potentially bounce if we come down another day or two. So it's still a little early on this, and it's a little early in the crisis part 2 to kind of, make any predictions on where this may go. The technicals are saying, hey, we've had some nasty days here. We are definitely in a short-term downtrend. That would suggest we go down a little farther. But we do see some areas where there's potential support on the chart. So all is not lost in this yet. Let's look at KRE, the regional bank ETF. Now, you heard me talking about how important I felt this support level was right in here, and not at all happy to see us close below that 2 days now. However, I do like today's candle a whole lot better than yesterday's, and it seems like this may turn into a pivot low. There's a good chance of that. So let's get this one marked up a little bit. All right, so here's our gap. Whoops, here, let me get that, drag that over there. Come on. All right, there's our gap from yesterday, and we'll get that pivot low. So right in about there, we need to see this level support. Really would like to see this move back up. If this doesn't, if it starts to break down through here, it's a fairly quick move to, I guess we should get this other level drawn in. That's right about there. Comes right off of that one. Okay, yeah, about $40 even. $40 even would be the next stop on this. And then we've got some, probably got some support around here at around 37-ish. So that's what we're looking for or looking at on KRE. And then, of course, the reason everything, all of this is happening right now is mostly due to First Republic Bank, partly due to UPS and their earnings call, where they were fairly pessimistic on the economy. And that sort of started to get this ball rolling again, combined with First Republic. All right, so you can see, you know, the initial nasty move down, really nice consolidation in here. It looked like things are really turning around for this this company. And then 2 big nasty days. Now, it's nice to see that we closed well off the lows. You know, we got about half of this loss back. Or well, less the gap there, but nonetheless, well off the lows. Volume started to come down a little bit compared to yesterday. So, you know, this suggests that unless there is another shoe to drop here tomorrow, that this could start to kind of claw its way back up a little bit and maybe, you know, start drawing itself, find a range in here, much like it did before. You know, I don't think we're going to have as many big down days as we had before. I think that, you know, like I said, unless there's another major catalyst that comes from the company, this starts to go sideways. Now, you know, and the bigger thing that's going on here is that, you know, remember the first time around, the government said, you know, oh, we got your back. Everything's insured, yada, yada, yada. Well, this time here, the government's really waffling on this. There are buyers who all they want is some assurances out of the government that, yeah, if we step up and buy this company or deposit more money into this company, try to save this company, that we're not going to be on the hook, that you got to step up too and help us out a little bit. Now, you can call that corporate welfare or whatever. I don't want to get political on it. But I think that if nobody steps up here, this will be the next bank to go. And if that happens, I think that not only investors, but the general public completely loses confidence. And we get a serious part 2 of this crisis. So something needs to happen fairly quickly here, I believe. Because there is the potential for this to really kind of spiral out of control, which is surprising. I thought we had gotten past that point. Yeah, it's disappointing that in their earnings call that, or it's disappointing that we didn't know before or sooner just how serious this issue was. It seems to me that this is material information that should have been released as it happens, rather than waiting for their earnings release. But that's a whole nother issue, a whole nother story. And we may see that play out. You know, the board's decision to hold that information back until the earnings release. There's probably some flack about that. So there you go. That's First Republic, and that's why you know, the banking is you know, become a problem again, and why the markets are reacting negatively to it, and you know, why things are a little risk off right now. But again, I think there's a potential for this to resolve itself fairly quickly. Somebody's just got to say, yeah, we got your back. Okay. Let's look at XLV Healthcare. This one, big gap down. Disappointing to see, because that was a nice little consolidation that you know, could have had a nice move if it had broken to the upside, but it did not. However, today it found that 200-day moving average. Look at that, to the penny. and bounced there. So that's good. That's a good sign. XBI, biotech. That broke out of this little range. Got to zoom out a little bit on this one. Okay, this broke out of its range, came to the downside, seems to be finding some support at moving averages, and you can see some other highs and lows. There's a fair bit of price action at that level. So much so that I want to get that marked in. There we go. That is, oops, just down. Come on, it's down just a bit there. There it is. Okay. All right, that's biotech. So, actually, you know what? Look at this. Bring that line up. You know, that's why some of your old trend lines, you know, they get broken or whatever. You want to leave them on there because they come back and want to play again. So that's interesting. You know, we should watch for a bounce in this. This could be a nice move. Catch some shorts off guard if this bounces. Okay. XLRE REITs. So even in all this risk-off mood, this is coming down, right? I mean, these generally come down slower than the market itself, but even our defensive assets will sell off as well, and we can see that in staples too. Almost closed this gap. Should be fairly decent support here, though. Would be surprised to see staples come down much farther than this. Utilities. Big nasty red bar here today. A little gap down and just gap and a big nasty bar. I wonder if this is somebody's earnings that I'm not aware of. Seems like a kind of an outside move for this ETF. So maybe an individual component had a really rough day. All right, technology, the strongest sector of the day, thanks to Microsoft. And Amazon. Actually, no, sorry, Amazon's not a technology. Amazon's consumer discretionary, I think. Yeah, we all think of Amazon as a tech stock, right? Anyway, you can see that yesterday came down to this important support level, and the 50-day moving average was right there. We had a nice big gap up today. Let's get that gap drawn in. There we go. That's probably going to come into play. Now, this will be going higher after hours. This will be having a strong move. Let's take a look at that. Not that strong, but still not too bad, though. You know, it's moved up even higher, so that's good to see. You know, right near its open, so yeah, not so bad at all there. Yeah, I mean, hopefully that continues higher tomorrow. Maybe technology's, you know, going to save the day here and drag this market higher. And one last thing, let's get this trend line in. There we go. Okay. Consider communication sector. All right, this rolled over. You know, this really started rolling over about a week and a half ago, and it's really accelerated in the last couple of days. However, we've got you know, nice moving average here. We've got the top of a gap. We've got a trend line. A lot of reasons to expect to see this to bounce from here. SMH, semiconductors, not looking great, but again, coming into an area where we should find some support. So hopefully we do. You know, like I said earlier, if these support levels start dropping, it starts getting scary. So again, you know, a reason to believe that this should either just kind of find a bottom and move sideways a little bit, or turn back up. All right, Meta. So this is the reason that we are seeing positive action in a number of our indices. In the after hours, Meta reported, and we'll go to the intraday on this so we can see this. What do you think? The market liked that? I think the market liked Meta's report here. Where do we operate now? Let's measure this out. There's our close, and we are currently up 11.5%. Not a bad move. So, you know, between Microsoft and Meta, saving the market here. Now with that, the way Amazon's been moving, we'll actually get to Amazon in a sec. But, this is looking like it's going to hold. They're probably on the call right now, I would think. So, maybe they can turn this back up during the call. But, it's not coming down too much. It was a big move up. So I think we can expect most of this to hold. And, maybe that can kick the market into gear for tomorrow. Okay, back to our daily chart. Let's move on to Apple. And here we go. So Apple not looking so bad, right? Obviously, it's pulled back a little bit, but found some support at the 21-day moving average today. I don't like that selling wick on top of this candle, though. So we'll kind of have to see on this. I wonder if Apple's moved in sympathy. So Apple has moved earnings, I believe it's, next week. Actually, I think it's on Wednesday, the same day as the Fed. Yeah, that should be interesting. All right. What am I looking for here? Okay. Okay, yeah, so Apple went up a little bit in sympathy after hours, and it started pulling back. All right, let's move on to Amazon. So Amazon had a nasty day yesterday with a big gap down, but a fairly decent day today. Gapped up, chopped around a bit, but held the gap. Looks like the 200-day moving average might be acting as resistance, and so is this this gap area that's still not quite completely filled. But Amazon has earnings after the close tomorrow, so this will all change by this time tomorrow. Netflix, kind of hanging in. A little bit of a red candle yesterday. But really, mostly just going sideways. That's good to see. Good on you, Netflix. Google. Not great. I heard some people talking about their call yesterday. So actually, let's go back. Let's look intraday on this one as well. Because these were their earnings. And I believe one of these big... Was it in here? I think this might have been their earnings call. They really apparently blew it on the call, whereas Microsoft in their call were like, really aggressively hyping their AI and where they're going with it. Google was totally chill about their AI, and that was the difference between the two. Google seems to be, or the impression is that Google is falling behind on it and not really concerned. So that's not good for Google. So this is one that I'd be very wary about buying any dips in this. I think that these guys need a quarter or two probably to get it together and get serious about AI, or they're gonna be left behind. Microsoft, we already talked about that briefly, but look at this ginormous gap that this put in yesterday. So might as well. This old gap here is pretty much closed, so we might as well get rid of that one and see if we can't draw in the new one. I can't believe the size of this gap. This is huge, right? Okay, so we've got to start from down here, right? There's the close on that candle, and the open was up here, the top of the body on that one. Look at the size of this gap. All right, so what happens now? Well, we pulled back and found support right at that line where we should. Exactly where we should find support, and move back up a little bit. I think after a move like this kind of needs to consolidate a little bit, especially given what's going on in the market. However, if the market can turn up, and in fact, how much of a bump did this get out of Meta? Almost nothing. Let's see. Let's actually get a little bit more of a realistic scale. There we go. So yeah, in the after hours, this came up into its open, and then it pulled back a little bit from there. So it's given back about half of that bump. So if Meta continues tomorrow, I think that all of tech could get a lift tomorrow, and Microsoft probably would as well. Okay, Tesla. Here's one that I don't think is going to get a lift for much for a while. I warned about this. I've been warning about this for a while. It doesn't look good. I think that even if tech is going up tomorrow, I think that Tesla could continue to fall. Fill this gap. I mean, we do have support here at 150, and I'm sure this will find some buyers at 150. But if it does break down through there, then it's a no-brainer. We fill the gap. That would be the next area of support. Would be at 146-ish, 145. And then there's more ugly. Then we're down into 135 after that. So Tesla looks like it's going to continue the downside for a little while. I would not be surprised if we're looking, in a few weeks or so, talking about a range that's in here, and wondering when it'll come out of that range. But I think if it does come down into here, it needs to build a range in here for a month or two before doing anything. Maybe even all the way to the next earnings. All right. Now, some of the plays that we have been following. HIMS. This had a nice move. It came right up into that pivot high and it pulled back. That's not surprising at all. That would be expected, and especially from a stock that is technically well behaved, we would expect to see a pullback after a quick move into a pivot high. We'd expect to see a pullback the very next day. It's very rare for something like this to break through on the first try, especially after it's already had a big move. Now, we had the one-day nasty pullback, and today, nice little indecisive doji. So that pullback did not continue today. And again, with everything that's going on in the market, hasn't even touched that 10-day moving average yet. So I'm not at all concerned about what I see going on here in HIMS. I think that as the market settles down and turns up, then this will no doubt turn up as well. ARLO. Now, we're going to get into the reason that I don't have any new plays today. I think the market is just too unstable. There's too much uncertainty, and you can see that in all these plays that we were looking at. We had beautiful setups, okay? You've got this beautiful setup here in ARLO, and it goes and it makes a nice big breakout, and what happens? It's a one-day wonder. And then we got two big down days, and now at least we bounced here off of the 21-day moving average. But you're not in this, right? Hopefully, as this started pulling back in here, hopefully you just bailed on it, given the market conditions and everything. There's a failed breakout right there. Let's look at Ocular Therapeutics, another one that we were watching. We were looking at this little bull flag here. Beautiful, big, strong breakout out of there. Comes into a pivot, big pullback. And remember, I warned on the weekend video, I warned about this. So look at, we're right up into an area here where we should expect to see this pull back, but it pulled back quite a bit. And we're right back now down to the breakout level. Now, this is an area where some people wait for a pullback like this. And, this is the reason why. This is a great example of why people want to wait for that pullback. But there's a quote I put in the newsletter a week or two ago. It goes, and I can't remember who it was. I apologize. Maybe it was Walter Deemer. Actually, I think it was Walter Deemer. When the train leaves the station, it doesn't stop and come back for latecomers. If it does come back to the station, there's something wrong with the train. And this is exactly what he's talking about. So he doesn't like these pullbacks. I'm maybe not as negative on them as he is. But, and I think if you really want to play this, if you're that kind of trader, then you're kind of looking at today's high. That's probably your entry, and you're risking to just below today's low. It's not necessarily a bad play. Not my kind of play, though. ARCT was one that we looked at in the weekend video. That did break out ever so slightly on Monday and then has just failed ever since. So these are all great setups. These are setups that in a better market would work wonderfully, but they're not working now. So, until we see a bit of a change of character, or at least some certainty on whether that certainty is to the downside or the upside, we've got to be really careful about taking any of these plays. So I don't have any new plays for you today. maybe things will settle down over the next couple of days and some things set up that we can look at in the weekend. But for now, I think we just need to be really careful. Keep an eye on these markets and see how the markets react to news. And that will tell us a lot and, give us a sense of where we go from here. All right, that is about everything I've got today. Let's take a look at what we got coming up. So this is our May calendar, and we will have on the weekend our briefing as usual. We've got another ticker talk coming up on Wednesday, and of course we'll do the weekend video that you can watch before the ticker talk at 7 o'clock. So these mentoring sessions with me are for our members in the Discord. So there's a link in the description below if you want to check it out and come join us. And we hope to see you there. And so thanks for watching, everybody. Don't forget to hit that like button, share, and subscribe. And I hope you enjoy the rest of your week.